So last week's historic market movements are followed up by another week of historic market movements. We discussed the current fog of fear that's out there and how to help you see through it. So today we're going to walk through four primary things. We're going to discuss kind of this current fog of fear that's out there, what the reality is as we all know it today. Two, some did you knows, some important facts, stats that hopefully will provide you the type of clarity to see through that fog about how you may feel about this whole situation 6 months to a year from now. Number three is really the mental approach, how we're thinking through markets and sharing some, again, different perspectives that hopefully can give you a little bit of hope in these dark times. And then finally, our approach, again, following up specifically what we're doing, why we're doing it, and how clients of 10 Capital can rest easy at night regardless of the screams in the headlines. So as relates to the current fog, there's really two key things that I want to highlight. Number one is when I watch people on television discussing this issue, or even in conversations I've had, the pushback you see from those who, again, want to perhaps be more concerned about the market impact of today's events or these current events is that there are unknowns. The reality is there are always unknowns. We just choose to look past them during the good times, and we often overweight them during times of fear. I think this COVID-19 situation is particularly interesting in that we even knew about this so-called unknown a few weeks ago, and markets didn't care, and today they're pricing them in like it's the end of the economy as we know it. And so here again, this is more about that mental approach of really checking those things that may sound obvious on their face to ask yourself, is that really different than it ever is? And embracing both the uncertainty and the humility that you need to have as an investor, and one that after 25 years of doing this, I've had to learn countless times, but I think give me a lot of confidence, again, stepping forward into these, which leads me to point two, which is I think a lot of that fear comes from, again, not having a plan. I'll get into how our plan was in place in advance and how it's working today at the end. But again, you can have success without an ability to predict the future, and that future is always full of unknowns. So the second section, big point I want to drive home, are some important did you knows that may give you confidence today that you would have otherwise only had in hindsight 12 months from now. I think the biggest place to start is this is very typical. As we said last week, for all of the moves this week, up three, down three, up three, down three, another historic volatility within the market. We're right about where we were at, still to 13% correction, in line with the historic levels, in line with SARS, in line with Zika. Of course, it can go a little bit deeper, but those people who are A, panicking, or B, waiting for an all clear, they're going to, again, miss a tremendous amount of opportunity. So I want to share some data points that, again, someone might have shared with you after the fact that could help you make some better decisions today. Let's just take a look at value. There are ways to equate bonds to stocks, riskless assets to risk assets, i.e. stocks. And if you look at the 10-year treasury rate right now, it's at 0.7%. If you were to convert that into a price to earnings ratio, like people do to stocks, it'd be trading at 130 times earnings. That is an outrageously high number. Conversely, the S&P is only at 17 times earnings now after this drop, and something like our balanced high income strategy is less than 15 times earnings, i.e. stocks, diversified portfolios, for as fearful as it may be appear in headlines, are offering tremendous value. Even on an income stream, your income at 0.7 on a riskless asset. Think about the fact that even an Apple or a Microsoft is giving you 50% more earnings or income than those. The S&P is 2.5 times higher than that ratio. Or again, something like our balanced high income is over 5% cash flow that you can lean on during these hard times without having to be forced into selling anything. For those people who say, yeah, but I just don't think this is the time, I would just tell you, at the end of the day, that would have to come from a place where you really believe you can time the bottom. And to that degree, I'd ask you, did you time the top? And if the answer is no, welcome to the club. But it's reason to, again, not use that as a strategy or believe it'll be different next time. Number three, the mental perspective. So Obviously, within the last month, we had the passing of Kobe Bryant and that tragic accident. As a sports guy, can't have helped but dive into a lot of Kobe videos and interviews. And what's been interesting to me is all the different mental games he would play with himself to get up, to find courage, confidence, to overcome insecurities and setbacks, and how much, again, of that is applicable. Doubt and fear and unknowns are just a part of the equation, but they don't have to be the end. And so I think, again, looking at some of those different mental games, it's really easy to focus today on the fear of this virus, how far the market has dropped from a peak. But what's also equally true is for all the volatility of this week, we're still above Friday's lows. In fact, a little bit higher. So, do you want to focus on the fact that we're down 13% from the high, or that we're even for the week? I think even more powerful to understand that for everything that's gone on here over the last 2 weeks, it's only taken us back to a level that we traded at within the S&P 500 on October 10th. And how did you feel on October 10th? My guess is when S&P was up 20% year to date, 25% from the lows of Christmas Eve 2018, you were feeling pretty good. And so, no, it's no fun to give some money back, but it's part of the game. And I'd ask you to embrace a little bit more perhaps of that October 10th attitude than here as we're approaching March 10th of 2020. The last thing I would just say is, the right course of action in terms of that mental approach isn't what feels right. It's more about the difficulty of things. And so I see a lot of people, and I use the analogy of focusing on your decisions based off distance or difficulty. And what I mean by that is a lot of people think the grand gesture is what's so important here. They're going all into stocks, or they're getting all out of stocks. The difficult thing is to remain patient and balanced. And that difficult thing, more times than not in my experience, is the right move. And so what was difficult a few weeks ago was to not chase the highs. What's difficult right now is to not panic into the lows. But again, that difficult thing, rather than that thing that you think is going to make this big difference, is probably the better course of action. So following up on the mental, which is critically important, it's important again to find positive perspectives, to embrace limitations, those things that'll get you in the right frame of mind to make good decisions. Does come the math, as the saying once said, show me the money. And at the end of the day, people need to see that money. For our clients, they come in two primarily type of buckets. You got your sippers and your drinkers, as I call them. So for sippers like me, hey, we're many years off from retirement. We have a systematic investment plan, that's the SIP. And so a month like this is a chance to use another paycheck to buy some stuff on sale, things that we hope to keep for many years until whenever we retire. So again, look at it as a great chance. For the drinkers though, these are the people who obviously find these times even a little bit more disconcerting. They're saying, hey, everything in my cup is what I've got to live off of. That's again where this income stream comes in such a critical part. A lot of people, we quoted the Fidelity study, we've seen it all the time anecdotally. They're loving to ride that S&P train when it was up 30%. When it's down like this and you've got to liquidate some shares into month end to help pay for those monthly bills, those shares never have a chance to rebound. They never come back. And so our primary goal is to get that income stream, build that diversification in. And when that happens, you can do what we're able to do right now for our clients, which is actually make moves that are increasing their income stream, increasing their long-term capital appreciation, all the while buffering a good deal of the volatility that they would be experiencing if they were just direct index investing type of clients. That's what we hope for you. If you're already a client, that's what we hope you remember during these times is occurring within your accounts and is going to see you through these times, whatever may come next. And for those of you who are not clients or those of you who know somebody who's not a client, it's something that they need to strongly consider, whether they end up working with us or not, to get them to that right place. So with that, thank you all for the positive feedback we got from last week's video and commentary. It's much appreciated. If you've got questions, comments, whether you want to see it in these videos or you just want to pick up the phone and have a personal conversation, please know we're here for you and those you care about anytime. Thanks so much.